everyone. So happy to be here today. So happy to be here even more that I've got Karl Dakin with me, and just a wonderful individual who is really, really astute and an expert in funding, has a whole lifelong career of doing it. And our key word today is investor or investors, trying to flip the channel to really being able to look at both sides of the street. I know we've covered a lot of uh, mindset and thought relative to people looking for money, but we haven't really spent a lot of time looking at the people who provide the capital and kind of what their viewpoint is, which would be valuable to those who are seeking money to have a really realistic viewpoint of what investors' qualifications are and needs. And again, I'm not just promoting Karl, but you really do need a professional if you're looking to raise capital to help you through the process, to give you that understanding, and also to give you some level of confidence when you're going out there. Before we switch to Karl, we've got Carrie, who says a geologist's favorite ice cream is Rocky Road. That's interesting. I used to like that flavor until I switched a little bit. But ice cream's always good for everything. I'm a big ice cream fan. So with that, Karl, I'll switch it over to you, uh, talking primarily about investors' view, mindset, and how to attract the right investors with the right approach based on where they're coming from, not where you want to go as much as a individual trying to raise capital. Karl?
Yeah, well, thanks for having me on the show, Don. And this is a nice part two to the show that we had on Monday, where we're talking about funding tips. And there's two sides to this equation. There's the person seeking capital and the person with the money. And technically, under most structures for raising capital, these are adversarial type of relationships because the person seeking money needs that money really bad to move forward, but every dollar that or every share of stock, every percentage of company they give up is cutting the amount of money that comes back to them for all the work they've done. So the person seeking money needs it, but doesn't want to give up as much, while the investor on the other side is going, it's my money, gold makes the rules, and I want as much of this as I can. And that isn't being greedy. I'm not trying to cast aspersions on the investors. The investors are going at risk putting money into an investment. There's always risk present. And because the payday is in the future and the payday is uncertain, they struggle with, how do I put a price on this? How much do I get that is going to give me a reasonable probability of getting not only my money back, but a return on my investment? So we're technically at odds at the beginning, but where most of the conversation is why wouldn't this person invest in me? And the person seeking money quite commonly fails to understand the investor, doesn't stand in their shoes, doesn't appreciate where they're coming from. All too often, they treat an investor like an ATM, where I ask for money, I get money. There's no fuss, no muss, and there's no relationship. It's purely transactional in the pitch, and the investors, by and large, just reject that out of hand. They don't have any interest in somebody who's treating them in that manner, and nothing happens. So statistically, when small businesses pitch to angels, they only get funded 2% of the time. 98% of the time, it's a strikeout. And if you're in the major leagues striking out 98% of the time, you wouldn't even get to the major leagues. You wouldn't even get to the minors. But that's the common statistic that's out there for making these kind of pitches. And so if we are working to try to make this happen more often, which is my job to facilitate bringing these two parties together in a win-win scenario, then we've got to understand where both sides are coming from. We got to try to figure out how to make this deal not only work, but make it the best possible. And we need a lot of communication going on.
Okay, well, it makes sense that communication is key to most building of relationships or identifying the other person's interest and side of the story. Um, what do you, to increase the odds of gaining financing? Would you say that someone you're working with who already has that credibility and distinction with investor groups would enhance that? I would assume that.
Yeah, I have three criteria for an investment to occur, and the first one is the person. The second one is that the person with money actually has the money currently available, and the third is a level of motivation. That's what this banner behind me speaks to: is what gets the people up in the morning. What do they care about? How much do they care? And if you are looking at a deal and you're an investor, you're going, I'd rather work with someone who has a good long track record of successful business ventures where the investors have made their money and then some, over somebody who's this first time out of the gate, never done it before. What they don't know can and will kill them. and and so that's something that investors look for, and it enhances their motivation because there's a greater level of trust in something that is still speculative, it's still going forward. So if I was going to lay my bets, so to speak, between a rookie and an experienced business jockey, I'm going to take the jockey every time.
That makes sense because, in my experience, and it's been a while raising capital, back then it was actually prior to the internet and prior to being able to send electronic messages, which would mean you would typically put something together, put it in an envelope, and mail it. And typically, whoever was receiving it probably had 100 envelopes that looked the same way from the outside in front of them. And I think that's part of the challenge, is not that people don't have interest, but people don't have time to explore proposals or potential clients because there's not enough time. And the people who do get a reference or have some additional credibility will kind of get to the top of the line faster. I guess there's also something that would require preparation in order to get to be known by the groups you want to, which would be networking groups, which could be, especially now on LinkedIn, following people who are really maybe quality candidates for investing in your venture. And like I say, commenting, reaching out, having Zoom calls. And that gives you and them a little bit of a head start on saying, hey, I know where this person is now. It's not going to work. Why bother them? But also, the time you save a potential investor is the time you save yourself, right? So the time you got to prepare something, mail it, hope to get a call, hope to get a response of some kind, and then you got to go into the deeper element of it, which is a little bit more explanation, which takes more time. And a lot of people can fall in love at first sight and without really knowing what they're getting into. Some people don't always give the best signals, which may show interest but not real interest. So I guess more is better, and I think it's better for everybody, because I know when investors know you have options, they take you more seriously, because it becomes a competitive nature. Plus, depending on who has an interest, you have to, like we talked the other day, feel like they must have done some due diligence or they know something. that, if you got three people lined up, but you don't really aren't always comfortable with them or the deal, another person could step in. So I think that helps to not put all your eggs in one basket. And also, I know you've talked about on your show and this show, is respect people's field and area. If someone only invests at 10 million plus and you're looking for a million, it's not going to work. If you're a retailer and they only invest in manufacturing, it's not going to work. You're not going to convince anybody to change what they're doing because you're not fitting into it. It's easier to find people who are doing it, fitting into it, and really asking questions, right? Sometimes people present their proposal before they even get introduced or get to have a call saying, I'm considering this. Would you be interested in talking about it? And that can save a lot of time and effort. And I do believe most quality investors want to do the right thing by most people, which could be getting them on their way to the right place sooner than having them stick around for something that isn't going to work out. So, this is so dynamic because we're dealing with individuals, people, money, all those things have emotional attachments. And the key is getting comfortable. So, so many people I think are stressed in getting money that whoever writes the check is good enough, right? As opposed to the money's good, but I feel uncomfortable about something, or it's not even thinking, it's knowing someone says, here's my expectations, here's my requirements. If we do this, you're going to have to give me so many board seats, you're going to have to put so many different conditions into it. How do you transverse that type of situation?
Um, well, I think there's about 2 dozen questions in there that we can deal with. We might get through one of them today, but we'll see what we can do. Um, it is, if you think about it this way, that every business is unique. Even as I joke with Harvey Tuck, who runs the franchise show and works with a coffee franchise, if you set up two coffee franchises on the same street 6 months apart selling the same coffee, they're still different because of the management, their location on the street, their knowledge or background going forward. The market may have changed, interest rates may have gone up or down. And for that reason, you have to treat every business as unique. But from an investor standpoint, if all they care about is a return on their investment, it's a money only style deal. Any business that can offer them, say, 20% return on investment looks like every other business that can offer them a 20% return on investment. And they then have to choose because they won't invest in both businesses. They're going to pick one over the other. So this gets us into the issue of businesses have to realize they're competing for money. They have to understand how to position themselves best. And one of the best things they can do at the very, very, very beginning before they put anything together in terms of an offer is figure who's going to want them, need them as an investor to fulfill the mission or interest of the investor. So that it's a pairing like we talk about with wine and food. We want to do the right pairing between an investor and a business from the very outset, because if they don't match up, it's never going to come together. And neither the investor nor the business can really afford to look at a deal that they're never going to work through. It's largely a waste of time to both of them. And the small business can't really afford to waste any time at all. They're needing resources, so wasting resources is kind of against the whole purpose of raising funding. Whereas the investor, they can pick and choose, they can cherry pick. They might see 100 deals. I typically will see one, two, or three deals a day come into my office where somebody is looking for funding, wants funding, maybe needs some help raising funding. And they're all over the place, from a $20 million hydrogen fueling station to somebody who's starting up a coffee shop. And when you look at each of them, you go, why would I go to the same person and ask the same investor for money for both of these projects? It doesn't make any sense. We've got to start, at the very beginning, saying, well, who would be a good match? Let's put on our dating hat here and figure out, well, I'm going to get this guy and this gal together because I think they come from the same background, the same families, that kind of a thing. And there's going to be a natural alignment occur, which is why it makes sense for these two to be talking to each other. And starting with that on the business side, that goes through a whole analysis of who am I, what can I offer, both within the dollar return, but also what benefits or rewards can I offer outside of the investment, which typically is where the decision is going to be made. Everybody seems to think, because they hear it all too often in the media, that all the investor cares about is making more money. That's just a basic component of the investment. Why they choose one business over another within this competition may be based upon all kinds of things. So we'll have impact investors who invest because they want to help a social cause, help a community do something, put purpose ahead of profits. We'll have other people who do it strategically because it helps their business or their other investments move forward better. There's lots of reasons. And at the outset, you want to know who you are so you know who to talk to. And you want to talk to them about what they care about as what the investor cares about so that this communication starts off on the right foot.
Yeah, well, I think that makes so much sense. And what comes to mind with what I'm hearing is how do you distinguish and differentiate yourself in the marketplace? So, what makes your coffee chain different than that coffee chain? And, when I got into e-tailing and marketplace sales, eventually what made me want to move on, in a sense, was the question I asked myself: how do you out Amazon Amazon? What you don't have to do all of them, but can you get better pricing? Probably not. Can you get better selection? Can you get better distribution? So if all you're playing for at best is second place, you're not in a very good position, because most of the time the only people who go to second place is people who had an issue with first place or were kind of unique in their own way, where they just don't believe in Amazon or something like that. So really putting something forth up front, and I think that's important too, is ask the most important questions first, right? Because just like a headline on an ad, if you don't get them in that space, you're not going to get them later on. And if you haven't thought out what makes me different, which also makes me more defensive, if you have something that isn't a commodity and has something special, a secret sauce, a secret strategic, not a secret, but a strategic alliance or relationship, a connection to something that will drive efficiency, margin, something that gives you an edge, because that edge will be something that isn't probably long lasting. One thing about, let's say, e-commerce or the internet is that it's like trying to play cards with seeing everybody's cards. And the same thing goes with LinkedIn. So in other words, everybody who's public facing and is producing content, everybody who has offers and promotions are visible to everybody. So there is no secret. The secret is, how did they get that way, maybe? So, okay, they can reduce their shipping by 50%. Well, how did they do that? Well, maybe they got a better relationship with UPS or FedEx. Maybe they have created some proprietary software that makes them process sales that much faster. Maybe they're leveraging AI. Could be a million things, but if you don't have something special except your desire, your hard work, and everything else, you're not going to have that ability to really blast off somewhere. And I think that's so important, is not only getting somebody interested, but the valuation depends on what it is you have. Some people will come in at a level that's attractive to them, but not attractive to you. You might be looking for a lot and they're willing to give you a little. You may be looking for equity situations that maybe aren't as significant or valuable as you would hope. Because investors who are in investing aren't there because they made dumb moves and they don't know what they're doing, or they won't be there very long. Everybody does, and I've seen things blow up and people blow up. But if it's funny, I'm listening to the Charlie Munger book today, and it's about the Charlie Munger, I forget what it is, but it follows Ben Franklin's, not almanac. And, it was just intriguing how this guy started where he did and ended up what he did. And one little factoid is he actually started in Warren Buffett's grandfather's grocery store as his first job, and only met Warren Buffett like 10 years later and found out that connection, eventually went partners with him. So, that's another thing, is building relationships before you need them is so important. When you're going out for money and you're desperate and you got your tin cup out there, it's not very attractive. It's actually a turnoff at that point. And it doesn't give you the time to kind of feel the lay of the land, get to meet people, get to know people. And also, the more you are prepared to do some research, to learn the industry, to learn the other side of the coin, to get individuals like Karl who can assist you. And that will save you a lot of time and effort, because sometimes you're just not ready. Desire does not always align with attractiveness. Karl.
So another 200 questions, Don. You keep this up. We're just getting. I'm sitting there going, I couldn't even begin to write these questions down quickly enough. So I'm going to make a couple observations here, and then we'll see where the conversation goes next. But you made a reference to Charlie Munger, and for those of you who don't know him, he just passed away recently, but very brilliant person. Works with Warren Buffett, helped make Berkshire Hathaway everything it is today, and well-quoted person, because he would make statements of wisdom everywhere. His books, will help. But it's a major, major caution I'm going to make about listening to Charlie Munger or Mark Cuban or any of the other people, because they are not playing at the level of 85% of the businesses that are out there operating today. They're playing way up here. As Don made a reference earlier, they're not making $10 million investments. They're making $100 million investments. And if you only need $50,000, which is a study that came out of one neighborhood recently, you're never going to match up with them. And yet you see people going, oh, I'm going to try and get in front of Warren Buffett, and I'm going to get an investment from him. And I'm like, they don't have a mechanism in place to do an investment small enough to even, help you, let alone see you and know that you need that. They know you're out there. They know all these small businesses exist, but it's completely different. And so when I see advice on the internet, and I sometimes call it Silicon Valley advice, because it's almost nonsensical to me, but it really doesn't apply to the mom and pop business, the small business, the startup business. It would be like asking the Kardashians what I should wear to the grocery store. They're putting on a $50,000 outfit, and I'm in jeans with holes in the knees. We're not in the same world. And so when you hang on every word of one of these webcasts or one of these popular aspirational speakers, I go, yeah, that's nice, but let's talk about my world, not your world, because there really is such a major, major difference. When I went to college forever ago, they didn't understand the word entrepreneur. They taught no entrepreneur courses. There were no businesses, no courses on small businesses, no courses on startups. This all evolved over the last number of decades. as the government, the people, economies came to recognize that small businesses and startups were needed. But it's a different language. It's different everything. Other than the fact, yes, we do spend money and we do raise money, but that's almost like the last common element between up here and down here. I get books all the time. People ask me to read them and review them, and I ask them legitimately, just like an investor, is this matching your audience? Is this talking to your audience? Or are you talking to someone else? Too often they come across as what I call Captain Obvious statements, where you go, yeah, that's true. I would agree with that. What's that got to do with me? And it's very interesting. I think you can learn from reading Charlie Munger's books. I think you can, Guy Kawasaki, all these guys who are held out there. But when you get done, you need to stop and say, how much of this applies to me today? Or will this only apply to me if I'm going to go public and I'm raising $100 million? Because if it doesn't apply to you today, set it aside. Hopefully you'll get to that later. It's in the back of your knowledge reserve that you can draw down off the shelf when you need it. But we got to get back for you first to survive and get out of the gate before we start counting our money at the end of the poker game.
Yeah, I think that's excellent insight and advice. And you have to ask yourself, how does a Charlie Munger or Warren Buffett decide here's where we're playing? And probably it's because that's their core competency, and that's where they feel they have the best opportunities to play. And I'm sure they could afford to create many different situations where they can get people at 1 million and 10 million and 100 million and cover the whole gambit, but it becomes a distraction, right? And that's the same thing with too many people. And that's another thing I'd like to say is when you're preparing a financial proposal, try to have a focus, right? It's sometimes too many people want to do too much with too little too fast. And they just figured if I throw enough bets around like spaghetti against a wall, something may stick, or they give themselves more credit to say, I can handle an 8-ring circus instead of a 3-ring circus. And it looks good, but it's not possible because you don't want to outrun your supply line. You don't want to get out there because in the beginning, when you don't have a lot going on, you got a lot of time. What changes when things start happening, you need to find that time. And you don't want to have a toe in 10 different waters and have to pull them all out to go back to the one you should have been in the first place. Plus, I think people are looking for authorities or experts in their field. And some people who did really well decide, hey, I'm going to pivot and go into something I don't know. But because of my business background and success, everybody will think it will transfer. And that's not always true. The other thing I would say is create a list of who you want to be with, not how much you want to get from them, right? So what is the personalities you're looking for? Do you want more involvement, less involvement? Do you want people who you can talk to and have quality conversations? Or are you looking for people who are just writing a check? We've got a LinkedIn user here who I looked up and turns out to be a gentleman called Josiah Yu in Columbia, South Carolina. Has about 12,000 followers, is a founder and solution security architect. Well, thank you so much, Josiah, for being here today. Carrie has a question, a comment on spaghetti. My spaghetti must be cooked good since I'm throwing everything at the wall and nothing sticks. Well, it could be the wall too. Don't blame the spaghetti.
Let me respond to that, Don. This is an interesting, I will call it a pervasive challenge for entrepreneurs and small business people, where they want to get approval, they want to get acceptance, they want to get funding. And so they have a fear that if they present an opportunity that is too small, too narrow, that it won't be attractive to the investor because the investor wants everything to grow up to be the next Google, the next Amazon, something like that. But it actually works to their detriment meaning that the more they spread themselves out and say, I'm going to do everything, as you say, have their toe in 8, 10, 12 different waters, what they do is they've diluted their message and they now look more like everybody else instead of standing out or being distinctive from everybody else. And it works against them. An investor would much rather talk to the person who is the world's greatest expert, even if it's a narrow niche of a particular business, because now they know that this person probably has an advantage. They know more. They can make this work. They can lead in their field. That's more attractive to them than I'm going to do something that everybody else has done. I saw a TV commercial last night as I was passing by the TV, where there was a new drink that was a combination of lemons and tea. Now, is that distinctive on its face? No, it's been done thousands of times. And I was sitting there looking at it kind of as I walked by, like, whose idea was that? And why do they think they can break into a market that's already got thousands of competitors? And it must have something to do not so much with the product, but who knows who behind the scenes and distribution channels. I immediately started looking for some excuse why somebody would enter a market as a commodity product, because I just like going that route. So when Kerry says, he's throwing everything at the wall, I would stop at that point and go, Kerry, what can you do better than anybody else? And your jokes that you put on the screen, I think, probably fall in that category. If you narrow it down to what you do best and you determine what you need to do to make money off of that and monetize that, and figure out what being best in the world might look like, then you have a niche that you may be able to capitalize on. And then going back to what Don was talking about earlier, now that I have a niche, I don't need to know all 8 billion people in the world. I need to know the people who know the niche. I need to know my suppliers and vendors. I need to know who are my potential customers. And now I can kind of get my arms around this opportunity and I can make it mine. Where if I go too far, too fast, too broadly, I can't control it. I can't influence it. I look like everybody else. I'm not attractive to investors. And it's really hard because I myself have been self-victimized, going, well, I can do that too. And you get to a point where you're like, yeah, you can do it, but is that really the best route, best strategy for you? And so I really think entrepreneurs, even if they're doing a coffee shop, for example, well, if they create one signature drink in that coffee shop, I don't know whether they're going to roast the beans differently, they're going to mix it with some other fruit flavoring. I don't care. But if they have that one signature drink, that's their drink. They can get a trademark on it. They can do all these other things and they can call attention to it. They're going to sell coffee all around that specialty drink, but now they have a reason to stand out. And this is very hard, particularly for startup entrepreneurs, to understand that niching is good. Being the best you can be is good. And that gives you a chance to be superior, to stand out. And that will make you attractive more to investors than trying to be everything to everybody.
Well, that's excellent advice there, because you really want to focus on what you do best, and that allows you to focus on who wants to invest in what you do best as far as the industry or the niche. There's more investors than you have time to acquaint yourself with or have them acquaint with you. So, narrowing it down makes a lot of sense for both of you. It's like pre-qualifying. And then the other thing, we've got a few more people. Dave, one of my good buddies and also a member of mine and Karl's cohort group, is here. So great to see you, Dave. Wonderful gentleman. Focus now on cybersecurity, private investigations. If you ever need somebody in either area, I definitely would advise checking with Dave. Look at his profile. This is a great opportunity just to make connections and meet quality individuals. Thank you so much, Dave. Dave will be on the show tomorrow with Kelly and with Jason. and that's always a great show. I want to share that Karl's community development program is on Thursdays preceding this show, so you can watch Karl's and the show and not miss a beat and double your pleasure. There used to be a chewing gum commercial, which was Doublemint gum, that kind of said the same thing. Uh, Dave comes back with very timely advice there, Carlos. I spoke with an investor mentor just yesterday, and that might be a discussion you and Karl may want to have. We've got Josiah back with the question, what is the best way to convince an investor to invest and expose the founders to their channel to maximize the benefit of the venture? What's your thoughts, Karl?
Well, first things first, in getting ready to receive capital, I would want to know myself better than I know myself. So I would create advisors or mentors around me, like David's just been talking about, who are going to help me understand who I am and what they think stands out as my talent, my niche, where I can give the greatest benefit to somebody. And then when I'm looking for investors, I want to look for those investors who will see, realize, and value that great benefit. I'm going to prioritize them. I'm going to take all 8 billion people on the planet, and I'm going to realize I probably can only talk to maybe 10 to 20 of those, maybe 100 if it goes poorly. But I don't have that much time to talk to everybody. So I will need to talk to those who care about me the most. Now, I may not know them today, meaning that I've never been introduced, we've never met before. But if I have a profile of who that person is and where they are at, like they're in the cement industry and they do only bridge foundations or something, I'm drilling in on who that person is for whatever reason that may happen to be, then I would ask myself what channels of information this person sees on a daily basis. They haven't yet subscribed to my newsletter, so I'm going to discount that one. But if they subscribe to Foundations magazine, there's half a dozen industry magazines out there. You're going, well, if I'm an advertiser or I get written up as a featured story in that magazine, this person may see me. And in fact, if I get published, my credibility goes up. So there's all kinds of ways to create your own billboard and put it on the street that the investor is going to drive by, so that they can see you and come to know you. And if you position yourself as being unique and solving a problem that they care about, which is why you've identified them, then they're going to reach out to you, even though you still don't know them and maybe can't even identify them by name. They need you. And the fact they need you makes you stand out. It gives them a reason to talk to you. It's not so much of investing as they're trying to solve their own problem. Yeah, they may have to put money in your pocket in order to solve their problem, which solves your problem. And then you have a good relationship at that point because you're both benefiting from the deal. So it's a different type of thinking. So when you throw out the word investor, narrow it down to a rifle shot. Don't do what Carrie was talking about, throwing spaghetti against the wall. We want to take a single strand of spaghetti and we want to put it on the wall 4 feet up and 3 feet over, because that's where the investor is that we've identified that we want to talk to. And then we want it to stick. So we have to know, what is the investor's preferences, what gets them up in the morning, what do they care about within and without their business. We almost get to a point of stalking the person in our desire to understand who they are and how they think. Because then when we talk to them, we're going to start talking about them first. We're going to say, I have a theory, I can help you. Let me put this on the table and see what you think. Now, I haven't asked for money yet. I've simply told them I think I can help them. And that's a great way to start a conversation. If it turns out you can help them, then they want you to have the funding you're looking for, whether they can provide it or somebody else can, but they want you to get your funding to help them in their own self-interest.
Well, that's great. I mean, I learned so much from what you're saying, Karl, and it kind of dovetails into a lot of my thoughts, which gives it more confirmation and validation. One thing that came to mind that wasn't available again when I was out there raising capital is social proof. And if you can build enough social proof like shows like this to show who you're communicating with, who is being attracted to your show, uh, how your posts may be significant, some may go viral. But I think people want to know that you're working with all the tools available now, not just being a master of things that are legacy issues. I mean, some people may be the best newspaper advertisers, but newspapers aren't of high regard anymore. Now it's what's your social proof, especially on LinkedIn, because it is a professional network. It relates to a lot of professionals. And people could say, who are you able to communicate? Who are you able to reach and attract? Which, if I had LinkedIn back then, I would have been picking up so many more suppliers, possibly so many more customers, especially on the B2B commercial level. And that would have been a tool that most people would appreciate because it's somewhat new to them, even. And if you're ahead of their curve on social media, then that gives you somewhat of a distinction. And it's not you just talking, it's you and everybody you're involved in is talking. And that also will give you references. And, everybody knows somebody for who they are, but they don't know everybody for how other people see them, what their experience is. I mean, sometimes you only have so much education, right? You went to a couple schools, you got your degree. Sometimes you only have so many business experiences. But that doesn't mean you don't have a lot of network that's quality. And that's important. Now we've got Jason Gerardo here. I have to look everybody up who has a LinkedIn username. And I don't know, that could be a factor of how you allow yourself to be seen on LinkedIn. So there could be something that, I know when you go to public exposure, you can show who you are to everybody. You can show who you are to something, and you can show nobody anything if you choose to. But Jason's just a quality guy. He's going to be on the show tomorrow, like I say, with Dave and Kelly. Good morning, all. Late to the party this morning, but glad I got to check in. Always a great conversation with you, too, for sure. LinkedIn user. Advisors know me more than me. Hone in on your vertical. I would assume this is Josiah. Find investors who are active in that vertical. Founders should build their billboard on the path where the investors drive by. That makes a lot of sense. And, I think that's important for forums like this or discussions, is you can learn a lot along the way. Some people who may not even be looking for investment will start to get smarter in that area. So maybe when it comes time, or maybe when they put all the pieces of the puzzle together, they say, well, hey, I'm there, in that sense. The other key thing is only ask what you need. Too many people go out and raise more capital than they need and figure they'll have a reserve. I mean, you should have a little extra money, but first investments are expensive investments. So if you say, hey, $1 million will give me 2 years worth of runway, well, use that million to get to 2 years. And if you get there even earlier, now the second round would be less expensive because proof of concept is already in place, cash flow is there. Anytime you could mitigate risk, you're going to increase your attractiveness and appreciation. And also where you invest it. If you're just investing it in, things that aren't tangible, aren't real, that's questionable. But if you're saying, hey, I'm gonna buy machinery that's going to do this, well, that's usually a pretty solid investment, as opposed to I'm just going to invest in a lot of people who know a lot of stuff. And how are you as a manager? I think that's important. How are you at building culture, especially if it's an organization depending on team. There's a couple links here. I'll let anybody go to see them if they want to. And I assume that's from Josiah. So, Karl, getting back to all the different elements as far as social proof as far as the ability to be attractive. And the other thing is you got to run your business while you're trying to get investment, really understanding you probably won't get the investment. So if you're like Tarzan, depending on the next vine to keep you flying, and that's a lot of times what happens in business is most people miss the vine, and then it's too late and they fall, and maybe they got to climb back, or maybe they don't get the opportunity. That's where I think a great financial advisor can help you, or investment advisor, how to structure it, because a lot of times you get so proud of things that no one cares about. Might be outstanding, but it doesn't matter as much as other things. Or some people try to confuse people by putting their best foot forward and hoping their behind foot isn't as visible. And I know everybody is, not everybody, but generally speaking, you're out looking out for your company and yourself, not as much for the investor. And there's a challenge there that you can be a little bit too opaque, because you say, hey, it's all about me until they come in. Well, what made them come in? And what happens after they come in? And all of a sudden you say, surprise. Well, that's terrible. And I think that lends itself to maybe a challenging road, or I'm sure a challenging road. So I guess there's a point where disclosure is important. Sometimes too much disclosure is just too much, right? If you got a ton of payables, people are only interested in maybe the top 15 to make up 90% of it. If you throw them every payable that goes from $10 up, and sometimes people require, let's see your receivables, let's see the aging, let's see your payables, let's see how you discount or how far behind you are on your bills. It's all that. And why not get everything in the right order and then go forward? Because once you're in, it's too late to come out and go back in. And that might be the reason that you got some appreciation and attraction, but you couldn't go to distance. But then again, rejection is a learning curve. So a lot of times, and we talked about that the other day, is ask people why it wasn't for them, and it could have been something that you could have fixed, or maybe you can still fix, and gives you a second opportunity, but better prepares you for the next investor, saying that, based on rejection or inability to raise the capital, I got to go back to the drawing board, which is either rework my business model to say how, and I think that goes with the good, better, best approach, is what happens if I get the money? Well, what happens if I don't get the money? What if it takes me 6 months to have the money? Am I getting too far ahead of it and put myself in jeopardy? It's all these timing, positioning, situational situations that make somebody pause. And other people are like, hey, it shouldn't be any issue. I mean, if you go to the bank with a $50,000 car and you're looking to borrow $5,000, there is nothing to the presentation, right? The asset itself justifies it because, it's security. And I think that's where asset-based lenders come in, right? Sometimes if you got a lot of current quality receivables, you can factor them. You pay a discount, but it saves you from having to go out and do some real financing. Doesn't cost you much. And there's companies out there who are in that business. So, Karl, next thoughts.
Well, I'm going to kind of go backwards to one of the earlier things and the question about how you present yourself in social media. And to some degree, I'm going to use myself as an example, which often is a bad example, but nonetheless a learning example. So I've worked for 45 years in startups, high tech, new businesses, and so forth. And I can do all kinds of different things. And it took me almost forever, in my mind, to realize that the one thing I did that almost everybody wanted to talk about was funding. Okay. And that seems like, wow, I just narrowed the entire world of entrepreneurship to a single, vertical sector. And so I started doing different things to try to improve my brand by telling people I was working with funding. I did podcasts, I do all kinds of social media posts and all this, and it's still I wasn't getting the job done for a variety of different reasons that I had to go back and think about it some more. And came
And
to LinkedIn. Yeah, Don's playing with the keys there in the background, so just ignore that for a moment. But the thing is funding is still a huge topic. And so as I decided to put on my own LinkedIn live show, Successful Funding, Tuesdays, 8 a.m. Mountain Time, I decided I was going to focus primarily upon other people who I work with in helping small businesses and communities raise money. So the title of the show that I put on that, Successful Funding, and the speakers and the guests are all me trying to put my billboard in the right place at the right time for the niche group I'm trying to do. Now, alongside of that, I do my daily newsletter, Instant Funding, and this is aimed at small businesses and communities. It's like, here's information on how to raise money. I want you to be successful. So I've got two different vehicles side by side on LinkedIn. One's aimed at one group, one's aimed at the other. And lo and behold, guess what? It's not good enough. So I'm working with this new team to develop community investment funds. And so if we take funding, this big open topic, and we niche it down, we're now talking about a super specialty in communities, in investment funds within those communities. And we started a new show that's Thursdays, as Don said. It's at 8 a.m. Mountain Time. And we're talking about community revitalization, helping underserved communities by raising money and putting it in places where you get an economic cascade that serves as a synergistic type of a benefit to that community. And now we've gone hyper narrow to do that, but we're still using LinkedIn. And within the platform, it changes things. Well, this team I'm working with, we're now talking about forming our own group on LinkedIn on community revitalization, which is another thing you can do in LinkedIn. Don does polls on LinkedIn. You can get a top voice if you're an expert on a topic. LinkedIn, I think, has like 500, 600 different topics that you can be a top voice on, where you can give your expertise in commentary. And after a while, they'll recognize you and put that on your banner. If you'll see on my profile on LinkedIn, I've got one on fundraising as a top voice. And I'm working on two or three others that are there. But these are different ways to stand out, to distinguish yourself, to make yourself visible instead of invisible to the investors. Investors cannot invest in you if they can't see you. And so you have to pick the path or multiple paths within a coherent, comprehensive promotional type of a program to say, who do I want to talk to? Where am I an expert? Where can I stand out? How can I position myself so the people I want to know or meet over time will see me, hear me, and start joining in with me, either as a subscriber to my newsletter or in the audience today. And the net of that is over time, my contacts get better, stronger. The people I want to talk to more whenever I do something in the future are there, stand by, ready for me to reach out and talk to them. I don't have to go hunting in the middle of a snowstorm, with no coat and no boots to try to find somebody, which is how.
yeah, a little frozen there, but Karl will be right back, I'm sure. And in alignment with what Karl was just saying, basically you have to. Let me switch back. Um, so Karl's little glitch, but to follow up on what Karl was saying, is you have to invest in yourself first. And most people want to know, what kind of skin do you have in the game? And I think that's important. The other thing is, to have that social proof, is having a show like this. And actually, I started out with the show just to do a show, get to learn what a show is all about. And that was about 2 years ago. And now, 800 episodes later, I think I've got a pretty good grasp of at least the components. And now I decided to be the person who just helps people get their own show, built a cohort group around it. It meets every other Thursday for knowledge sharing and support. And I think that's key, is to be somewhat comprehensive. Whatever you do, cover your bases in the ballpark that you're playing in. And I think by having shows like this, you can send this, you can make shorts, you can make reels that you could send somebody, right? Because they see how you communicate, they see who you communicate with, they see what topics, things of that nature. Giving more support and background to the niche you're looking for will make you stand out. The key is, how do you elevate above the crowd to get that special recognition? And then some people again say, well, someone did 800 shows, never missed one, never been late for one. Well, that kind of shows maybe they're dependable. Maybe they have perseverance. Maybe they'll go the route. Maybe they'll work with adversity and work through it. And I think the key is, and really quickly going back, when I first started almost all my business, I love bootstrapping because it creates automatic discipline. You only have limited this, limited that. What can you do with it? You find quality alternatives. So when I used to start going to trade shows, the places I would always go first were all the media places, all the trade magazines, and get to know the publishers, the editors. And pretty soon I got a lot of coverage, and that third-party validation made a big difference, because if somebody would write an article who was an honest broker, and it would make you stand out, all of a sudden people in the industry would start hearing your name, seeing your name in magazines and publications. And that would also give you something you could send people. Well, here's my last 6 articles. Here's what eBay wrote about me. Here's what internet retailers said about me. And that way it's not you talking about you, but you sharing other people talking about you that are honest brokers again, have no vested interest. And it's really building all your resources, not just, hey, I'm great at this and I do a lot and I make money at it. Well, that's kind of shallow and superficial to a point, but it's the nuances, it's those things. I know we're at top of the hour almost. We've got a long comment. Must be Josiah. How can innovators curtail the need to build everything they think of when investors are all about their money? How can creativity be encouraged? How can serious business meet either one of you? Again, I think to Karl's point, not every investor is in the money. I've actually gotten in front of investors that have more money than they'll ever. Actually, if you did a road trip down Silicon Valley, you're getting founders who invested in Google when they first started, or somebody else and made oodles of money, right? But they're looking to be smart enough to find the investor. They're competing with people in their category to say, I found it first, or I was smart enough to get insight into this. And sometimes investors will find you, depending on the situation, or agents will find you. I once had someone come to my business and said, hey, Target's looking for specialty players in the e-commerce business. And I'm tasked to find 4 or 5 of them, blah, blah, blah. You never know what you don't know. Fishing in many pools with the same interest, with the same mechanism, can help you. So, Karl, we started.
Yes.
So,
Don,
address this?
I was just reminded that I have a hard stop here that I need to jump to another call, but I just want to tell Josiah, I think listening to Don is giving you bad lessons and asking 100 questions at once. So all your questions are great. I like all of them, and I would love, to dive into them. And so we'll see what we can do to get that in the future. But these are all good questions that every entrepreneur faces, and you're going to have to work through each of them. And sometimes if you can't, get some help, get a board of directors, a board of advisors, get consultants, somebody who can bring a different perspective and more experience to the table to help you work through these. But the niching, telling your story within your niche, as Don has been talking about, That's a critical element to any entrepreneur, anytime, anywhere. And so use that as kind of a foundation to start with. And with that done, I've got to jump. So
Sounds good, Karl. Thank you so much. It's always a pleasure. Look forward to our next show together. And reach out to Karl if you are in the market or have an interest in learning more about what Karl does and maybe what you can do together. So, with that said, good luck, Karl. We'll talk some more and I'll finalize the show, which is actually right now. So, with that said,